Hello, and welcome to Desert Island Discord. Let battle commence. Hello, and welcome to episode 1 of Desert Island Discord. Now, I've been co-hosting and producing the Desert Island Investor podcast for several years now, and I'm going to reveal a secret. After we've stopped recording, Mark often has a right old whinge. He does put a lot of time into analysing the figures for his stock reviews, but sometimes he puts as much effort into complaining about the behaviour of the directors, how crap the sandwiches were at the last AGM, and the disappointing state of the world of investing in general. Anyway, instead of him going on and on at me about it, I thought it would be a good idea to find out what aspects of investing really grinds Mark's gears and share the joy with you, dear listeners. So, if you're a private investor and something about the process of investing annoys you, Desert Island Discord is probably going to cover it. If you've had a bad experience of your own investing journey due to some incompetence or bad practice, please visit our website and let us know if there's a topic you would like us to drag through the mud, or in our case, the sand. So, let's get started. Good morning, Mark.
Good morning, Paul, and a Happy New Year.
Oh, Happy New Year to you. Thank you very much.
Yeah, we got passed over in the New Year's honours list. I did have hopes, but I thought we might have had some recognition for our services to private investing or even carol singing.
Yeah, I did notice that we'd been overlooked again this year, but I don't think you're going to win any awards for carol singing, Mark. But anyway, so as you can hear, I've been working hard to get the Pirates of the Caribbean into fighting mood, and they're now having a grand old battle. So who or what is facing the sharp end of your sword today?
Secrets, Paul. I'm getting a little tired of being kept in the dark about developments that could potentially affect my investments.
And who exactly is treating you like a mushroom?
Well, in terms of personal experience, it's the executives of some of the companies that I invest in. One company in particular that I'm going to talk about in a minute. But on a wider scale, I'm annoyed that an increasing number of PLCs seem to be ignoring the importance of issuing formal notices in a timely manner when something in their business changes that could have a negative impact on the return on investment for investors.
So what constitutes formal notice?
It's called an RNS.
Okay, and how do you receive that bit of information?
Well, I personally use ADVFM as a platform. I'm sure there are many others out there that use it, and all my holdings are listed, and also those on my watch list. And as an RNS is released, there's a notification besides the holding, and I just click on it.
So what kind of event needs to happen that would require a company to issue an RNS?
Anything that could potentially affect the share price, really. Results, notification of results, corporate action, acquisitions, mergers, director trades of significant shareholders, that's over 3%, director appointments, the result of AGM resolutions, trading updates, things like that.
Okay, is it a legal requirement?
Yes, creating an effective investor relations strategy is an increasingly complicated challenge. You need it to fulfill domestic and international regulatory obligations and communicate with shareholders, analysts, and institutional investors at the same time explaining your company news to the markets. And it's crucial to ensure transparency obligations under the rules like the Market Abuse Regulation, MAR. And then there's sometimes a grey period over the exact timings of releases.
Okay, so which of your own stocks are guilty of keeping you out of the loop?
Well, quite recently, I did see some activity in Strix, ticker symbol Kettle. We've covered this one before. And that was trading at about 35 pence, 36 pence on the 15th of December. And the next couple of days, it started moving up to about 41 pence. And I thought, there could be something going on here. Anyway, sure enough, there was an RNS released on the 19th of December where they revealed that they were selling their billet arm for 110 million pounds sterling, and that equates to a price of 47.8 pence. And this was 3 times higher than what they paid for it just 3 years ago. So, and they would be using this to get rid of their debt. So, unsurprisingly, that had a positive impact on the share price. And instead of the previous day, it had traded at 40.65 pence, and it finished, and it opened up at 50 pence. But later on in the RNS, it said the board is in active consultation with shareholders regarding the ways of efficiently returning further capital to shareholders. The board will provide an update to shareholders at the same time as the group's FY26 results. Right, so that's obviously that some people are in the know about this and they've been talked to. And then under where it says recommendation and letters of interest, it says, in addition, the board has consulted with certain shareholders regarding the disposal and shareholders holding a total of, it gives the number of shares, 19% of the general company's share capital have provided letters of intent to vote in favour of the resolution to be proposed to the general meeting. So they're obviously already in the know. Now they'd be classified as what they call insiders. So they're not supposed to act upon that, but it certainly looks as though there may have been, given the price increased a couple of days earlier, some what we'll call leakage. All right, so that's one. Right. And then there's Titan, ticker symbol TON, and they've been one of the worst culprits for what I call random releases of RNSs. And an example, going back a couple of years, we attended the AGM and we re-elected the then CEO, Alexandra French, and that was on the 22nd of March. And on the 6th of April, it was announced that Alexandra had agreed with the board to step down. And it remains my suspicion that the decision had already been made ahead of the AGM, and rather than face questions at the AGM, it was delayed until afterwards, and that there was very nearly a full year before the board as a collective would have to face questions, by which time, hopefully, it would have been forgotten, which it wasn't forgotten by me. And in addition, the RNS was issued at 6:03 p.m., and that's way after trading finishes that was on the Maundy Thursday, ahead of that long bank holiday weekend. So, that was hopefully after all the laptops have been switched off, and that would attract as little attention as possible. So I raised this with the new chair, Jamie Brooke, who was sympathetic to my request and stated that he wanted RNSs out at 7 a.m. wherever possible. However, just this year, I'll give you some examples. The 7th of July, 8:01 a.m., Jamie Brooke, who was the chair, had bought some more shares. On the 11th of July at 8:10 a.m., Ruth Anderson, a significant shareholder, had reduced her holding. On the 29th of September at 11:42 a.m., Crucible Clarity Fund had increased their holding. And again on the 29th of September at 13:18 p.m., it was announced that Claire Ritchie had reduced her holding. Now, I don't want to sit in front of a laptop all day. I want to absorb the RNS at 7 a.m., and that gives me an hour to consider any action like any other person. I have the suspicion, which is without foundation, that random RNSs could be used by somebody tipped off that there's a release that's on its way, and at the very moment that it lands on the screen, they can trade before others have had the chance to read and, importantly, absorb it.
Yeah, I can see that as being a problem. You said earlier that you've seen more and more examples of companies failing to realise the importance of telling shareholders what's going on. So what's the other example you wanted to talk about?
In October this year, well, last year it is now, McFarlane PLC had experienced an employee fatality at one of their sites. And, this is obviously really tragic news. But there was a 16-day delay between the incident taking place on the 7th of October and an RNS being released by the company on the 22nd of October. And on the release of that news poll, the share price dropped nearly 19%. Now, I will suggest it is very likely in the time period between the incident taking place and the announcement being made that shares will have been traded by two sets of investors. Firstly, trades would have been made by those who were ignorant of an event, which had may have affected their buying or selling decisions. And more significantly, trades could have been made by those who were closer to the business and fully aware of the situation.
So were you insinuating insider dealing at McFarlane?
Well, firstly, there's been a loss of life, right? An employee, and this is a very sad event and obviously distressing for family, friends and colleagues. No, I was not insinuating anything. I will add some clarification. And now I don't think, I don't want you to think you can hear the beep, beep, beep of me going into reverse, because I believe this situation is a serious one for McFarlane investors.
So were you impacted by this yourself? Do you hold McFarlane stock?
No, not now. I was at one point a shareholder, but I sold my stock many years ago. So I've no skin in the game and I've no axe to grind. However, when I worked as a salesman in the paper and packaging industry, McFarlane was a customer of mine for many years, and I regularly visit their various branches. And I had and still do have a number of friends and acquaintances who worked and still work for McFarlane. Now, on the 22nd of October, the RNS was released, and this was headed Trading Update. And then below, the reduction in full expectations, I'll read it out in full. So McFarlane Group PLC is updating the market today. Since the announcement of the group's H1 2025 results, there has been a tragic incident at Pit Reeve, acquired by the group in January 2025. The financial impact of this, combined with slower improvements in trading and distribution, are the key contributors to a reduction in the group's estimated full year 2025 adjusted operating profit, now expected to be 20 to 25% below market expectations. The Pit Reeve full year 2025 performance will be materially below previous management expectations. This is as a consequence of the recent fatal incident at one of our Pit Reeve sites, which has resulted in a temporary suspension of operations at that facility. Any additional impact of the Pit Reeve incident will only become clear when the authorities have completed their investigation. The H2 2025 improvement in distribution sales and gross margin has been slower than expected, with market conditions still challenging. Manufacturing operations, excluding Pit Reeve, continue to perform robustly. The focus for the remainder of 2025 is on stabilising the Pit Reeve business and continuing to implement performance improvement actions in the distribution business. NetBank remains well within the group's 40 million facility. Commenting on today's announcement, Aline Gulveen-Asin, I hope I've got that right, chair of the group, said, following the tragic incident at Pit Reeve, our thoughts are with all those who have been impacted. Since then, steps have been taken and will continue to be taken to provide such support and activities as are needed to ensure the well-being of our colleagues. The incident has naturally had a significant impact on the McFarlane business. The board supports the management team in its focus on stabilising the Reeve business and implementing actions to improve the performance of the distribution business.
Wow. So even when McFarlane did announce the death, it was not done as a material information disclosure, but was simply included in a trading update, RNS.
Yes, personally, I think it would have been appropriate and respectful for an RNS regarding the fatality to have been released immediately and in isolation and not wrapped up in a subsequent trading update. And I'll just add this, Paul, that if it was a director, it would have been reported to the market and probably not had as big of an impact to the business as this.
I mean, the management actually say in that report the incident has naturally had a significant impact on the McFarlane business. So waiting 16 days before alerting the market about that development seems pretty poor practice to me.
Yes, it is. It's widely accepted that material information that could influence a company's share price or an investor's decision must be disclosed to the public as soon as possible. And this practice ensures fair and equal access to information for all investors. On reading the RNS, the wording and tenor regarding the death confirms that this was, without doubt, material information.
Yeah. And I believe that there's some other important information missing from the RNS.
Yes, the RNS states that there has been the death of an employee, but it doesn't mention when that took place. The only reason I know that the employee passed away on the 7th of October was that I read it in Print Week, which is a trade magazine.
So they weren't exactly keeping the news a secret.
Well, they weren't keeping it a secret from people in the printing industry or from anyone else for that matter, but for 16 days they were keeping it a secret from wider investors.
So if McFarlane omitted the date of the employee's death from the RNS because they didn't want investors to know how long they'd been kept in the dark, what kind of share dealing shenanigans might have been taking place over that 16-day period?
Well, I did refer to this on LinkedIn, and I was deliberately very careful with my words. I was not suggesting that insider dealing took place. That kind of activity generally involves directors or a PDMR, person discharging managerial responsibility. Any share dealings by them or their spouses will tend to attract great scrutiny. However, I would imagine that the news of the death would have been common knowledge around the McFarlane Group network. Their drivers, warehouse staff, sales team, etc., suppliers and customers would have found out very quickly. The death was covered by the local newspaper, so people local to the area would have found out, and it was even announced in that paper trade magazine. At the end of the day, in the investment space, those nearer to any business have a clear advantage over those that are not. And in this case, all of the above became closer to the business than private shareholders.
So, if you were an investor, how could you have taken advantage of the situation if you gained early access to that information?
Well, if I still worked in the packaging industry, I would have been pretty sure that in my capacity as a salesman, I would have been made aware of this development on my visits to the McFarlane depots. And I'm equally certain that the employees I met would have voiced their opinions about the potential impact on the business. If I lived locally, one of my friends might have overheard a McFarlane employee talking about it at the golf club, and he could have tipped me off because he knew I had some shares. Now, if I was a shareholder, the question is, would I have done nothing armed with this information, or as soon as I got home, would I have logged into my broker platform and dumped my McFarlane stock?
And why would you do that? I mean, surely, although the death might cause the share price to drop, the company is strong enough for it to recover.
Well, precisely.
What do you mean by precisely?
Well, if I sold my stock when the price was unaffected because the stock market was unaware of the death, then when the news is announced and the share price drops, I could buy it back again at a lower price. In this case, with McFarlane, the stock became 18.8% cheaper once the news was released.
So would that be considered insider trading?
Good question. Will my decision have been based on insider information or just general knowledge which was widely available to anybody connected to the business?
Okay. So I can see how unscrupulous shareholders could manipulate the situation to their advantage, but I suppose there's always the risk that the plan won't work out if it turns out that the price dropping isn't just a blip.
Yes, even though the share price fell, the stock market may consider that the full enormity of the problem is not yet reflected in the share price. It could fall lower. If the market thinks that shareholder confidence in how management have handled the affair has been eroded, the share price may struggle to recover at all. As I say, I've no vested interest in this business, but if I had been thinking of buying stock, I would have been very concerned of the delay in releasing this tragic news. And even if I had undertaken my own research, read the annual report, done as much due diligence as possible, I could have bought McFarlane shares several days after the death took place because the news about it had been withheld, and the evidence of how significant that event has been is reflected in the drop in the share price. And I think I would have been incandescent.
Well, I've done some research on this, and at its core, insider trading involves trading securities based on material non-public information, aka MNPI, and that provides an unfair advantage over other market participants.
Yes, but not all trading by insiders is illegal. And company executives, directors, and major shareholders regularly buy and sell company stock. But for that to be legal, corporate insiders must properly disclose their trades through required, in the US SEC filings, or with us in the UK, the FCA, and adhere to company trading windows and policies.
And the penalties for not disclosing that information can be pretty severe.
They can indeed. You can personally be given a 25-year prison sentence, millions of pounds in fines. You can be required to pay back the profits that you gained or the losses that you avoided, and face fines of up to 3 times the amounts involved. And of course, being in prison doesn't do your reputation a lot of good. Plus, your company is in deep trouble too. They may face fines for failing to implement proper controls. And of course, insider trading scandals can severely damage corporate reputation and shareholder confidence. And things get even worse. Shareholders often file their own lawsuits against the company following public insider trading cases and have been successfully prosecuted.
I mean, to give some perspective on how serious this can be, I took a note of some high-profile cases. In the 1980s, Ivan Boesky, Boesky, became the face of financial wrongdoing after being charged with trading on non-public information from investment bankers and corporate insiders. In 1986, he was fined $100 million, sentenced to 3 years in prison, and permanently banned from securities trading. And in 2011, Raj Rajaratnam, founder of hedge fund Galleon Group, was convicted on 14 counts of securities fraud and conspiracy. He received an 11-year prison sentence and $156.6 million in fines and forfeitures. Apparently that was one of the largest insider trading cases in history. So action can be taken, but how often is it actually successful?
Well, the problem seems to be that the rules governing insider trading have evolved significantly through court decisions rather than through explicit changes to statutory definitions. So the interpretation of the law by one judge differs from that of another, which results in cases that are almost identical having different outcomes. And I know we've had discussions about that problem before, Paul. To be successful in enforcement, the authorities have to prove that the trading was in breach of fiduciary duty or other relationship of trust and confidence, and they must also prove intent. So they need to prove that the act was deliberate and that the person knew that they were taking advantage of information that had not been made public. Now, I would imagine that the accused would come up with plenty of excuses to try and show that the trades were in some way innocent.
Yes, I can imagine. Yes, Your Honour, I did hear a vague rumour that a factory had burnt to the ground, but I didn't know it was mine. And by a strange coincidence, I'd sold all my shares the previous day. So, is there anything at all that private investors listening to this podcast can do about any of this?
Well, yes, they can attend AGMs, they can ask questions, they can vote, perhaps voice their thoughts publicly, and ultimately sell your shares if you've lost confidence.
Right, okay, thank you. Well, I think we're pretty much done with that. While we're in the mood for having a moan, we're going to throw in at the end of each episode something that's off topic, so non-investing related. So, what else has been grinding your gears this week, Mark?
Well, just a quick one, Paul. It's whenever I see a zero tolerance policy. It's generally used by people like Avanti Rail or HMRC or my doctor's surgery. And when I see that, I think I'm in for a pretty bad customer experience. So zero tolerance policies, Paul.
Yeah, I have experience of that. As soon as you see that, you can almost guarantee that the service you're going to receive isn't going to be very good, and you're not going to be allowed to complain about it, which is nice position to be in, really, isn't it? Okay, well, that just about wraps it up for this episode of Discord. Thank you very much, Mark. Thank you to everyone for listening. Just a reminder, this is simply an addition to the Desert Island Investor podcast series. So if you already subscribe to that, then you'll be notified when future Discords are released. And if you haven't heard the Desert Island Investor podcast, please seek it out. We're on YouTube and Spotify and other main podcasting channels. I will put a form on the website if you have an investing topic that you would like Mark to drag through the mud, or you can post comments underneath the YouTube version of the podcast if you prefer. In either case, please do like and subscribe. Thanks very much for listening, and I'll see you next time.